Imagine a world where your paycheck arrives untouched by federal income tax deductions, a scenario that seems like a distant dream. Yet, President Donald Trump has recently reignited this debate by proposing the abolition of the U.S. income tax system, suggesting a radical shift toward funding government operations through increased tariffs on imported goods. This controversial idea has sparked intense discussions and debates across the nation. A radical proposal. In a bold move, Trump has suggested scrapping the federal income tax altogether and replacing it with substantial tariffs on imports. The income tax, which has been a cornerstone of the U.S. fiscal system for over a century, contributes significantly to the federal budget, funding essential services such as national defense, healthcare programs, and public infrastructure. Trump's plan, however, envisions a return to a tariff-based revenue model, a system reminiscent of the pre-20th century era when duties on imports were a primary source of government funding. The historical context. Before the establishment of the federal income tax in 1913, tariffs were indeed the main source of revenue for the federal government. These duties were levied on goods entering the U.S. from other countries, and they played a significant role in protecting American industries from foreign competition. However, as the nation industrialized and its economy became more complex, relying solely on tariffs proved unsustainable. The introduction of the income tax allowed the government to tap into a broader and more predictable source of revenue. Fast forward to today, and tariffs constitute only a minor fraction of federal revenue. The modern economy is vastly interconnected, with complex supply chains spanning multiple countries. A sudden shift back to a tariff-based system would represent a seismic change in how the U.S. funds its operations and interacts with global markets. What would it mean? Trump's proposal to abolish the income tax in favor of tariffs raises numerous economic questions. One of the most pressing concerns is whether tariffs alone could generate enough revenue to sustain the federal government. To match the vast sums collected through income taxes, tariff rates would likely need to be dramatically increased, potentially reaching levels that could disrupt the entire economy. Higher tariffs typically lead to increased costs for imported goods, and these costs are often passed down to consumers. Everyday items from electronics and clothing to food and household products could see sharp price hikes. This would disproportionately affect low and middle-income families who spend a larger portion of their income on essential goods. Moreover, the impact on American businesses cannot be ignored. Companies that rely on imported materials to manufacture their products would face higher production costs, which could reduce their competitiveness in both domestic and international markets. The result could be slower economic growth, job losses, and reduced consumer spending. Political reactions. As expected, Trump's proposal has elicited strong reactions across the political spectrum. Supporters of the idea argue that shifting to a tariff-based system could simplify the tax code and encourage domestic production. They believe it would reduce the regulatory burden on businesses and workers, potentially leading to job creation and economic growth. On the other hand, critics contend that the plan is regressive, as it would place a greater financial burden on lower-income individuals who spend a larger portion of their earnings on goods that could become more expensive due to higher tariffs. Some experts have also raised concerns about the potential for trade wars, as other countries may retaliate by imposing their own tariffs on American exports. The road ahead. Trump's proposal to abolish the income tax in favor of increased tariffs represents a significant departure from the status quo. While the idea may appeal to those who are frustrated with the current tax system, it also carries considerable risks and uncertainties. Policymakers, economists, and the public will need to carefully weigh the potential benefits against the economic and social costs. As the nation grapples with this provocative proposal, it is essential to consider the broader implications for economic equity, consumer welfare, and America's role in the global economy. Ultimately, any decision on such a fundamental aspect of government finance will require thoughtful deliberation, robust debate, and a clear understanding of the potential consequences. If you found this video informative, make sure to subscribe to this channel for more content. Thank you.